Welcome everybody. This presentation is part of a three-part series discussing how to be a treasurer in your investment club. In this first part, we give you an orientation to your investment club accounting. This is good background information for everyone in your club so they can get a basic understanding about how your club finances work and what you will and will not be able to account for with bivio. The second and third presentations are aimed more specifically at you club treasurers. In Part 2, we discuss how to perform the regular tasks that you'll be doing each month. For those of you who have questions about things like reconciling your accounts, this is where we'll be discussing this. The third and final presentation is also designed for treasurers. In it, we discuss the tasks that you will be performing less frequently. If you have questions about things like withdrawals and doing taxes, this is where we'll be discussing them in more depth. For tonight's topic, we're going to be discussing your club finances. It's very easy to do your club accounting using bivio, but you need to have a basic idea of the parameters under which it needs to be done. Because you're accounting for a group, things work a little differently than you might expect. Everyone in your club should at least understand the basics so that you won't by accident take an action which will make your treasurer's life very complicated. To start our orientation, it helps to understand what your investment club accounting is designed to accomplish. As an investment club, you're a group of people owning a shared pool of investments. You'll want to keep track of your investments and track how they are doing. You'll also want to track your ownership in the club. Since you're running a financial group with the intent of making money, you'll also need to file taxes to comply with tax laws. To do all that, all you need to do is enter some simple information into bivio. Your treasurer just enters all the transactions you have in your brokerage account. But it's important to realize that behind the scenes there's some sophisticated accounting going on. It helps to get a little bit oriented to what that is so that you keep things on your side of the screen simple. So what do you need to know about your club accounting as an investment club member? First, let's talk about your club assets and your club ownership. All accounting is based on a very simple equation. We call this the accounting equation. It states that the sum of your assets, which is what you own, is equal to the sum of your liabilities, which is what you owe, plus your owner's equity, which is what you can take away at the end of the day. An investment club is a simple business that does not have any liabilities, so the accounting equation becomes even simpler. Your club accounting tracks what you own, which are your assets, and what each person's ownership share is, which is your owner's equity. In a club, you'll have these types of assets. First of all, you'll probably have some cash. This includes investments that accountants consider equivalent to cash, such as money market funds. You'll also have publicly traded stocks, stock mutual funds, stock ETFs, and if you subscribe to our active partnership service, you might also have bought or sold some options. The choices on this list give you a lot of investments you can choose from to build a club portfolio. Each evening after the markets close, the prices on all your investments are updated. The value of all your investments and your cash is added together, and this is called your club valuation or the net asset value of your club. You can see it reported on a valuation report. It changes every day because your assets are stocks whose price changes daily. Essentially, your club is managing a mutual fund. You may have several different accounts for your club assets. For example, sometimes clubs have both a brokerage and a bank account. You can see the cash balances in each of your accounts on the Accounting Accounts page. In order to be able to reconcile your accounts each month, your treasurer will be tracking account transactions in bivio in an account representing the account they actually occur in. But it is important to understand that for the purposes of your accounting, all your assets are lumped together. No matter what account you keep them in, they are available for investing or paying club expenses. At bivio, we like to encourage you to keep your club financial operations as simple as possible so nobody has to be an accountant and everyone can focus on the fun part of being in a club, which is picking stocks. For simplicity in keeping your club records, we highly recommend that you try and operate with only one account, a brokerage account. Each financial account that you have needs to be reconciled each month. Therefore, the less accounts you have, the less work for your treasurer. Many brokers now offer free checking. And even if they don't, you should actually have minimal reasons to need checks for anything. There are other options you can use to pay the infrequent expenses an investment club should have. Your club assets will increase when you receive income such as dividends and interest coming into your club from your investments. They'll also increase when your members make contributions and when the value of any stocks you own goes up. As part of your investing activities, you may exchange one asset type for another. Cash will be used to buy stock, and cash will be received from selling stock. And finally, the value of your club assets will decrease if you pay for any expenses, a member withdraws some of his assets, or the value of any stock you own goes down. We have made it very simple for your club treasurer to keep your records. All they need to do is to make sure that all the transactions from your brokerage are entered in bivio. If you use AccountSync, this will happen automatically. It's very important that all transactions be recorded on the correct dates and that your records be kept up to date and that they agree with your financial statements. It's also important that you track all your club's financial accounts in bivio and that you record all of the transactions that happen in those accounts. Dates of your transactions are very important in your club accounts. It's important that you know that your club records are being kept accurately. As part of your monthly treasurer's report, your treasurer should verify and be able to demonstrate that your club records match the records from your brokerage. They should also provide you with a report you can use to confirm your member contributions have been recorded accurately. In addition, you should plan to do a yearly club audit where members other than the treasurer confirm your records. Mistakes are usually easy to fix before taxes are filed or members make withdrawals, but corrections can become very difficult after that. It is in everyone's best interest that you all make sure you are comfortable that your club records are being kept accurately. There's one final area of concern relating to your club assets. It's important to understand that while there are lots of things in the world you can invest in, you can't use bivio to account for all of them. You could run a complicated partnership, invest in lots of different things, and pay a CPA thousands of dollars a year to prepare your tax return. Thanks to the generosity of the people who make our tax laws, different types of investments can have specialized tax reporting rules that you need to comply with. Sometimes clubs inadvertently get into complicated investments because they're traded in public markets, discussed regularly in investing publications, on TV, and on the internet, and you can purchase them from your broker like stocks. It's important that you know what you are buying so you know you can use bivio to do all your accounting and tax reporting. For example, we do not provide you with the accounting or tax reporting you'll need for investments in things like master limited partnerships. This one comes up fairly often because these often are touted as, quote, high-yield investments in popular investing publications. They are often pipeline and energy companies. Popular ones are Kinder Morgan, Enbridge Energy Partners, and Lynn Energy. We also get asked every now and then if we can account for things like futures, Forex, which is foreign currency exchange trading, and even real estate. You can have an investment club that invests in real estate, but you can't use bivio to do your accounting and tax prep for you. There are other types of investments which we recommend you stay away from because they can make your club accounting very difficult, delay when your club and your members can file your taxes, and increase your chances of your club and your members needing to file amended tax returns. There are things like REITs. These are also called real estate investment trusts. A popular one we often see is Annaly, whose ticker symbol is NLY. Commodity ETFs. Just because something is called an ETF doesn't mean that it is something we can account for. It will depend on what type of investment makes up the ETF. For example, commodity ETFs have become popular recently for people who actually want to own precious metals such as gold or silver. These ETFs actually own the underlying commodity. They don't own stocks. Two popular ones right now have the ticker symbol GLD and SLV. The accounting and tax reporting for ownership of precious metals is different than that required for ownership of stocks. Bivio does not provide you with the tools you need to account for and report taxes correctly for these investments. The list could go on, but I hope you get my point. There are just some investments that you should not purchase in your club if you'd like to keep your club accounting simple and be able to use bivio. Investment clubs are about learning to invest in publicly traded corporations, not about learning to do accounting. Stick to our guidelines and you'll still have lots of investments to choose from to build a portfolio and learn about investing. There are new types of investments being developed and promoted every day. We have a page where we list specific tickers for investments that we run into that will cause problems. We call this our Before You Invest page. You can find a link to it on our Master Help page. This list is not comprehensive. We update it as we become aware of problems. There are probably investments out there that aren't on the list yet but should be. If you have any questions about something your club is considering investing in, please email us the ticker at support@bivio.com. We are glad to research an investment for you before you purchase it and get yourself into problems. Unfortunately, if you come to us after the fact, things can get pretty complicated. At that point, you may have ended up in a situation where you need to hire a CPA to adjust your accounting records correctly and prepare the correct tax forms for your club. You know what they say about an ounce of prevention. Of course, one of the biggest questions you'll have about your club assets is, how are we doing? You'll be able to compare the performance of your club portfolio directly with stock market indices and even mutual funds using the Bivio Performance Benchmark Report. This powerful analysis gives you a direct apples-to-apples comparison. This is much more accurate than comparing your results to performance numbers you'll see in advertisements for mutual funds, which don't reflect your exact cash flow. On the other side of the accounting being done is record keeping about your ownership in the club. There are important things to understand about how your club ownership is tracked. It affects how much you earn on your investment in the club and how much of the club earnings you'll be taxed on. Club members do not own a specific percentage of each of the individual assets of your club. They own a percentage of the total assets. Your ownership is accounted for using shares, or what we call units. Owning units is just like owning shares in a mutual fund. The reason we track ownership using units is that Bivio is designed to track unequal ownership of a pool of investments. They change in price each day. Using unit-based accounting, you have the greatest flexibility to operate an investment club and do your accounting fairly, even if everyone has not or cannot contribute the same amounts to your club at the same time. Each time you contribute money to your club, you purchase units. It's fine for each club member to own a different number. If you'd like to take some money out, you redeem units. Each day, the value of a unit is determined by dividing the total asset value of your club by the number of units outstanding. You can find the daily value of a unit on the Bivio valuation report that I showed you earlier. Your percentage of ownership at any point in time is your total units divided by the total units in your club. Your club's profits and losses are divided up based on your ownership percentages at the point in time that they occur. You can see your percentage of ownership for any given date on the member status report. You can also see the total value of your share of the club on that date. It is determined by multiplying the number of units you own by the daily unit value. This is just like the way you determine total value if you own mutual fund shares in your personal investment account. If you owned 100 shares and the value of a share at the end of a day was $8, your mutual fund holdings would be worth $800. To properly do your accounting for units, member contributions and withdrawals are recorded a little differently than any other type of deposit or expense. The information needed to make entries is input on special payments and withdrawals forms, which are accessed using these buttons on the member screen. After the forms are filled in, Bivio does the accounting to add or subtract the appropriate number of units to each member's account. Because you are purchasing or selling shares, one of the pieces of information you will provide on both the member payment and withdrawal form is a valuation date. The value of a unit on that date will determine how many units a member receives or redeems. To keep your record keeping the simplest, we recommend that you use the date of the deposit as the valuation date. That way things work just like they would in a mutual fund. Members buy club shares at their value on the date of their contribution. So how is your club income and your expenses divided up between all of your members? On the date your investments earn income or your club has an expense, you are allocated your portion based on your percentage of ownership on that date. It's important to understand that ownership percentages may change on every date a member contribution is recorded. This makes the dates of entries in your club accounting more important than dates in the record keeping for other organizations that you may have done. We call this time-based allocation. Here's an example of how income and expenses might be allocated to members over the course of a month. Suppose on May 1st, these were the percentages each of these club members owned. On May 15th, the club received a dividend for $100. It would be allocated to each person like this. On May 18th, the club had a deductible expense of $100. It would be allocated to everybody like this. Now suppose on May 20th, some of the members' ownership percentages changed. This might happen if, for example, member payments for some of them but not others were recorded. Then on May 26th, the club received another $100 dividend. It would now be allocated based on these new ownership percentages. At the end of the year, each member's income and expense allocations are tallied up and used to prepare your club taxes. We'll be talking about those in a few minutes. The amount each member has been allocated is shown on a bivio report called the Member Tax Allocations Report. You can access it at any point during the year to see how you are doing. In a club, everyone is equal in the sense that income and expenses are allocated to you based on the number of shares you own. If I own more shares than you do, I will receive a greater total amount of income. This makes sense. Clubs sometimes feel there's some reason everybody needs to have equal ownership. Trying to accomplish that actually will complicate your club accounting. The only way everyone would own exactly the same number of shares is if everyone's contributions were recorded for exactly the same amounts on exactly the same days, month after month after month, year after year after year. But this is just not going to happen. It's inevitable that different club members will own different numbers of units. An investment partnership is a long-term undertaking. Life is going to happen. People will have to miss payments for legitimate reasons. People might have times when they can't contribute as much as they used to. People might need to take some of their money out of the club. And people might want to join your club. It doesn't make sense to have members leave your club or not allow new members to join if they will actively participate but are unable to have quite the same monetary stake as other members. We can tell you after years of participating in and working with investment clubs that equal ownership is just not going to happen. The good news is it doesn't matter. Your club accounting is designed to account for everyone's percentage of ownership accurately. If your treasurer is reconciling the books correctly each month, you can make sure your ownership is being tracked properly and you are being allocated the same amount of income and expenses in proportion to your ownership share as everyone else is in proportion to theirs. Focus on learning and working together to optimize your portfolio performance. If your portfolio grows well, all members will benefit, even if they don't benefit by exactly the same total amounts. You are a group working together to learn to manage a mutual fund. The fund doesn't care who owns what. What matters is that each member is committed to participating in the group, both monetarily and providing research and education, not that each person owns exactly the same number of shares of the club. While we're talking about expenses, another thing it's important for everyone to understand about your accounting has to do with what we call individual expenses. Investment club accounting is designed to account for club expenses. These are expenses that apply to all the members of the club and that can be divided up either by member ownership percentage, an equal amount for every unit that you own, or by an equal dollar amount charged to each member. An expense that you want to divide up in any other way is what we call an individual expense. You don't want to pay these with your club accounts. There's no benefit in doing so, and it will complicate your club accounting. Here are some examples of individual expenses. Subscriptions, if everyone doesn't participate in the subscription the same way. A common example of this is the personal portion of a Better Investing membership or an individual Manifest Investing membership, where some club members want it and others don't. Unless your club feels stock analysis tools are a club expense that your club should use club funds to purchase all at once for each member, this is an individual expense. If individuals want individual copies, they should purchase it for themselves directly. Same thing for educational materials when they're only for one member's personal library. Club dinner expenses come up fairly frequently. Unless you're dividing up a dinner tab based on member percentage ownership or equally between everyone, don't pay for your dinner with a club check or from a club account. There is no way in your accounting to allocate the costs in any other way to individual members. And there is no benefit to doing so. It will only make your treasurer's job harder. To keep things simple, have individuals pay expenses directly that only apply to them. Don't deposit the money to cover them in your club accounts, and don't pay for them with a club check. Club income and expenses that are allocated to you will determine the amount of taxes you're going to pay. Let's talk a little bit now about your investment club taxes. Clubs like yours that use bivio are operating as a type of business entity called a partnership, or a type of entity taxed like a partnership called an LLC. Uncle Sam has specific rules partnerships must follow when it comes to accounting and tax reporting. A partnership is what is called a pass-through entity. There are no taxes paid directly by your club on your investment income. It is all divided up each year amongst your club members, and they pay the taxes on it on their own personal tax forms. As a partnership, your club still does need to file an informational tax return on IRS Form 1065. It reports the amount of income your club had and the amounts that have been allocated to each member to pay taxes on. Part of that return are forms called K-1s. There's one for each member. You'll send all of them in with your club tax filing, and you'll give each member his or her copy. He or she will transfer the information from this form to their personal tax forms and pay any taxes that are due on it there. The question always comes up of who has to file club taxes. Well, the answer is that you do. If your club has an EIN number, you need to file club taxes. It doesn't matter how long your club has been in existence or how much income you've had. If anyone in your club thinks this is not the case, please refer them to a recent Club Cafe posting where a club was trying to figure out what to do about a $33,000 penalty they had been assessed because their members did not think they had to file in a year in which they only had a very small amount of income. Don't expect to file your personal income taxes as early as you might have before you were in an investment club. You will need the income and expenses from your Club K-1s to report on your personal taxes. But before your treasurer can prepare them, they will have to verify your club records against 1099 forms you'll get from your financial institution. They have until February 15th to send them to your treasurer. Therefore, you'll probably find that a reasonable date to expect K-1s from your club is March 1st. There's another tax consequence you have as a member of a club. Because you're a member of a partnership, you have a capital interest in a business. There are similarities between this and the ownership interest you have in a corporation when you own stock. There are special tax rules that apply when funds are put into your club and when funds are taken out. Just like when you own stock, you have a basis in your investment in your club, and you might have capital gains or losses when you withdraw funds from your club. One thing club members often don't know is that the capital gains tax on withdrawals from your club is in addition to the taxes you will pay each year when you're given your K-1s. But don't worry, you won't get taxed twice. One of the things bivio does for you is to track all your financial history with the club so that when you eventually withdraw money, you'll have the information you need to pay the appropriate taxes. There are actually some nice tax rules relating to withdrawals taken from partnerships that you can use to your benefit to help you manage your taxes. We'll discuss those later. Your tax basis in your club is determined by the amount you've contributed over the years, plus or minus your share of any income or losses your club has recognized by selling investments, plus your share of any dividends and interest your club has received, minus your share of any expenses, and minus any money you've withdrawn from the club. These are the things that have been reported to you each year on a K-1 and you've been taxed on your personal taxes. You can find out what your tax basis is at any time on the member status report. If you withdrew all your money from the club on the date of the report, you would have a capital gain or loss equal to the difference between this column plus any allocations you've accumulated during the current tax year and the market value of your share of the club shown in this column. There are some interesting benefits to being a member of a partnership. they relate to taking money out of your club. Of course, withdrawals that are made too often make it difficult to manage an investment portfolio. Just ask any fund manager whose mutual fund suddenly goes out of favor. But there are cases where you or another club member might need to make a withdrawal, so it's interesting to understand how they work. First, you need to understand that there's more you need to do when someone withdraws than just look at what their account is worth and write them a check. This is a business you're withdrawing money from, and there's a lot of accounting we need to do to update your records and prepare your taxes correctly. You don't have to do the accounting yourself, but you do need to know that you need to determine the withdrawal amount and make the withdrawal entry using the special withdrawal button that I mentioned earlier. We'll be discussing withdrawals in more depth in the third presentation of this Treasurer's Training Series. Make sure you don't give a club member a check or tell a club member what they will receive without an understanding of how to fill in this form. If you need to withdraw some, but not all of your funds from your club, you can do so with no tax consequences as long as you take cash and withdraw less than your tax basis. We call this a partial withdrawal. If you need to withdraw all your money and are paid using cash plus appreciated stock, much of any gain can be deferred until you sell the stock. The basis in the stock you receive will be your tax basis in the club minus any cash that you receive. A gain that is taxed in the future is usually better than a gain that is taxed today, so this presents some interesting opportunities for you to defer gains on your investment in your club, perhaps to a point in time where you will have some personal capital losses to use to offset it. Or if you never sell the stock you receive and it continues to show a gain when you die, your gain will never be taxed. Under current tax rules, the basis of inherited stock is stepped up to fair market value for the people that inherit it. So we covered quite a bit today. I hope you can see why it's important for all the members of your club to have a basic understanding of your club finances. If you stay within the guidelines for running your investment club that we have outlined here, your club treasurer does not have to be an accountant. In fact, using Bivio, your club accounting will be very simple and anyone should be able to do it. Clubs only run into problems when they try to create their own rules for operating without understanding the accounting and tax consequences of what they want to do. As we've been discussing, partnership accounting is a little different than what people may expect or be used to. If you don't understand something your treasurer is doing or tells you they can't do, don't put your treasurer on the spot to be able to explain all the accounting or tax rules behind it. Any club members should feel free to email us at support@bivio.com with any questions. We're glad to help clarify things not only for your treasurer, but also for any other member of your club. Just remember these few points and you'll be able to run your investment club easily. First, make sure your club is filing annual tax returns. Verify your records. This can't be stressed enough. Make sure your treasurer gives a monthly report and ask questions if you see something like a negative balance on a bank account. The current state of your finances is dependent on the dates of all the historical transactions. Make sure your records mirror what is happening in your financial accounts and that your ownership is being tracked correctly. Keep your club record keeping simple by operating with only a single financial account. Only use your club financial accounts for investment-related transactions that apply to all club members, not for individual expenses. Make sure your club ownership is tracked correctly. All member contributions should be being entered as member payments, and any payouts should be determined and recorded as withdrawals using the correct forms. If you're unsure whether an investment is something that can be accounted for by Bivio, ask us about it before you purchase it. Define equality as meaning that everyone is allocated the same amount of income and expense per unit of the club that they own. Let go of the need for everyone to own the same percentage of the club. And ask us at support@bivio.com if you have questions. We're glad to explain things to any member of your club. Expect your treasurer to know how to use the program, but don't expect them to know all the underlying accounting. For those of you who are or will actually be club treasurers, or who want more specific detail on some of the topics we've discussed here, there are 2 additional parts to this treasurer training series that are coming up. First, we'll discuss monthly treasurer tasks. We'll show you how to handle and record member payments, stock purchases and sales, and investment income. We'll cover how you should reconcile your records and also how to give your monthly treasurer's report. We'll also show you how to set up Account Sync to do many of these things for you automatically every month. In the third part of the series, non-monthly treasurer tasks, we'll show you how to do some of the treasurer tasks you'll do less frequently, such as how to enter a withdrawal, how to enter club expenses, how to reimburse a member who pays an expense, what to do if a member pays in advance, your annual club audit, and what you'll need to know about preparing your club taxes. Everyone is welcome to any and all of these webinars. They're all online and free, and you can register to join us at www.bivio.com/clubcafe. We hope to see you then.